Good afternoon, everyone. First of all, can any one of you tell me whether the screen is visible and my voice is clearly audible or not? Let's wait for 1 minute or okay. Let some people come, then we'll start. Okay, anyway, start. So today we'll study about August part 2, economics and financial news. Okay, and in this news we'll cover all the economics and financial important news, relevant news from the perspective of RBI as well as NABARD examination from 11th to 20th of August. Okay, this includes not only trivia details or trivia metrics related news, but it also includes various circular as well as policy initiatives of various regulatory bodies news also. Okay, so understanding those regulatory body news is very much important for you to do various questions in NABARD as well as RBI. Okay, so we'll first start with that. Okay, and then we'll focus on those one-liner news in the end. Okay. So let's start with that. So this is our first news. This talks about that SEBI proposes easier rules for voluntary delisting. Now the important portion in this news is all about voluntary delisting. And what delisting? Obviously, when we talk about listing and delisting, we are talking about shares. We are talking about stocks that are listed on the stock market. Okay, so whenever a IPO comes, okay, that means an initial public offering. Whenever a company wants to, list its shares on the stock market for trading, that is known as listing process. Okay, and the same opposite portion, which is when a company wants to take out or move out all of its shares from that particular stock market. Okay, that process is known as delisting. Okay, so here today we are talking about voluntary delisting. That means if a company is voluntarily asking to move away all the shares from the stock market, okay, so how do that company goes about? Okay, and recently all of you must have heard about HDFC as well as HDFC Bank merger. Okay, and when the merger happened, the stocks of HDFC stopped trading. Okay, so it means they got merged with the HDFC Bank. So this is a normal merger process. But if suppose if my company, say M Private Limited, is listed on National Stock Exchange, okay, and I have around 100 shares listed over there, and what I want is voluntary delisting. So I want all these shares to delist or come out of stock market. I don't want to give my equity to the stock market. So how do I go about that? Because when I delist those things, I also have to pay these shareholders, whoever is holding my shares, some amount of money, and at what price I have to repay those shareholders. That is the whole process of voluntary delisting, within which SEBI has actually provided easier rules. Okay, so this is the context in which we are talking about this circular of SEBI. And whatever concepts that we are discussing here, at least in the circular portion, feel free to ask me a question, because understanding here is very much important rather than this text based. So let's see what was the previous mechanism of voluntary delisting. So previously what used to happen, just like in case of IPO, book building process is used for price discovery. And these are jargons. If I explain to you, you will say that this is a very simple aspect, which means 2 days will be given to the investors to bid for, let's say, shares of Reliance. Okay, so for Reliance, if Reliance is actually wanting to get listed in the National Stock Exchange, 2 days will be provided for every investor to bid for Reliance shares. So suppose some person actually bid for 150, some bid for 160, and some bid for 170. So this will be the price at which this maximum bidding, and this price, at this price Reliance share will be allotted, because the bidding is always higher in this. Okay, so coming towards this price is known as price discovery. Okay, just a simple mechanism. Book building providing you 2 days for accepting bids, and the bids which is having the highest amount of bidders, that will become your price at which you will provide the share on the stock market. Now reverse it. Okay, because this was listing and we are talking about delisting. Now if you reverse this process, so you will go by reverse book building. In this also, you will try to discover price at which you will provide the shareholders the amount of money. Okay, because you are delisting, that means you are actually buying those shares from the shareholders, because Reliance share will be with various shareholders as they are listed on the stock exchange. Okay, so if a company wants to take all those or delist every shares, it will have to pay these shareholders, and what amount the company will pay, that will be discovered through reverse book building. Here also various investors will say that I will buy on, I will sell it on 160, I will sell it on 170, I will sell it on 180. Okay, so the maximum amount wherever, at any price where the maximum shareholders are there, okay, that will be fixed for reverse book building. Okay, but there was always a lacuna in this process. What is this lacuna? For any company to delist, it has to sell at least 90% of shares, or it has to buy 90% of shares. It has to at least remove 90% of shares. Okay, but suppose if one investor, okay, is holding more than, suppose 10.5% shares, okay, and he is asking, instead of this basic price, he is asking 1000 rupees, then obviously it will hinder the process of delisting of Reliance company. So that's why SEBI is saying that to remove all these lacunas, we are trying to float fixed price mechanism. Okay, so in fixed price mechanism, whatever the price of delisting will be there, it will be fixed, so that the process of delisting gets smoother. I hope this is clear. If there is any confusion, feel free to ask. But the most of the crux of voluntary delisting is this only. Now we will move on to what is RBI focusing upon. Okay, all of you know that RBI is the apex organization that is actually trying to, increase financial inclusion in the country. Okay, so this is another initiative of Reserve Bank of India in that particular direction. What is the step? This is project for public tech platform for frictionless and specifically credit. Okay, so let's understand this. So we are talking about frictionless credit. If all of you are following the news, then I hope all of you must have heard about that our finance minister talked about frictionless credit at the G20 meeting where India showcased its fintech expertise. Okay, so frictionless credit, first of all, as the name suggests, okay, it is very efficient credit disbursement process. Okay, but right now the process is obviously, filled with various malaise. That means hindrances. Then how do we make the whole process of credit frictionless? Then Government of India has actually provided with the initiative. Okay, so what is this initiative? First of all, if we want to understand frictionless credit, we should first understand, centralized platform that all of you are well aware. Okay, it is due to RBI's core banking solution, the initiatives such as NEFT, RTGS as well as IBPS got successful. Because what core banking solution did, it actually made a centralized web platform that had the knowledge of various bank accounts and various different banking details, so that any bank or any account holder, any customer with any bank account can transact to any other customer for any other bank account. Okay, this was only possible for if we are having a centralized platform. So similar case, if we focus on in terms of credit disbursement, if I'm going to a bank, then what is, whenever I'm asking for a loan, bank asks me different things, and bank also have to follow different compliances. If I'm taking a loan, let's say suppose housing loan, okay, then I will go to the bank, I will give all my financial details, okay, which includes PAN as well as my credit history as well as the details of the housing project that I'm actually taking loan for. Okay, and then those details include land records, also the GPS location of that particular site. Okay, the satellite data will be there, and all those different data are with different departments. Okay, so land data will be available with the state government. PAN validation, permanent account number validation will be done by central bank, and obviously credit history will be with credit information companies, and rest of the banking details will be with the banking companies. Okay, so all of these are actually different silos. Okay, bank is different. Bank doesn't have information about my land data. This is with different authority. Similar, PAN validation will be done by different authority, and my credit history obviously will be done by different authority. So whenever I have to take loan, I have to go one by one to each authority in order to do my credit disbursement. But what if we make a centralized platform that have details of each and everything, so that if a bank wants to provide me a credit, it can easily get all such data from this platform and directly provide me with the amount I'm asking for as a loan or credit. So this is the core crux of frictionless credit. Okay, frictionless credit, or the initiative that the government is trying to launch, actually provides a centralized system that contains all the details relevant for a loan disbursement on a single web-based platform. This is the core crux of frictionless credit. Okay, everything that you will see or read about in this particular news, it is actually making you understand that it is a frictionless credit is only possible because having a centralized web platform that can provide all the details for a particular bank essential for loan disbursement. Okay, and since this is at the nascent stage, that means at a new stage or a pilot stage, government is only trying to focus upon, first of all, disbursing credit under Kisan Credit Card Scheme, where government is trying to see whether this centralized web platform is actually functioning very nice or not. Okay, so this will enable trying to provide 1.6 lakh loan under KCC scheme through frictionless credit. Okay, because if this gets successful, then obviously, see, anyways, if a if a person from middle class go, then he or she may not feel that much issues in collecting the documents from various organizations. But suppose a farmer who wants to get loans, and if he or she might not be able to produce some documents or might not be able to do it swiftly. Okay, for that or for them, this frictionless credit will increase the financial inclusion or increase the access to finance. Okay, so that is the sole aim with which the government is functioning. Okay, any confusion in this frictionless credit? You can ask me, or shall we move on? So let's go. Okay, so the next news is only about SEBI's appointment. Okay, because SEBI, all of you know, there's a chairman. Okay, then there are four whole-time members and also 4 part-time members. So previously SEBI was working with only 2 whole-time members, with both members sharing the burden of various departments. But right now 2 people have also been appointed by the central government. And who are these 2 people? These people are Kamlesh Chandra Varshane, okay, and Amarjeet Singh. So these 2 people have been Sumit is asking, you could not find video on the channel explaining about your RBI Grade B course. Sumit, if you go on the website now, there are all the details with respect to the schedule with which we are actually trying to conduct classes, as well as all the details or all the documents that will be provided to you. Or you can just contact on the numbers provided and the representatives will actually guide you everything. Okay, so this is the news, very basic news. First of all, this is very important from the perspective of exam, at least from the phase 1 perspective, because these are the 2 recent appointments. Okay, also understand, also remember who are the chairmen of these regulatory body institutions. So, does anyone know who is the chairman right now of SEBI? Ms. Madhavi Puri Butch. Okay, so please remember the chairman also. Now next is Next, we are talking about the RBI Bulletin with respect to the August month, okay, in which RBI actually talked about various different outlook, be it including international economy, be it including domestic economy, how is India faring in context of repressed world economy, okay, and what are the various drivers of Indian economy that is actually trying to uplift its performance, okay. It also talks about various type of inflation that we dealt with in month of July. Also, it talks about various type of, financial instruments and how they have been working in there. Okay, so first of all, it is about the state of economy. Okay, so in this state of economy, the RBI Bulletin is actually talking about that how the world economy that was recovering because of, because it was already under various repression because of pandemic, because of Russia-Ukraine conflict, because of monetary policy tightening, okay, and even after facing these challenges the world economy was trying to recover, okay, but the recent data of manufacturing and the global trade tells us about that this recovery is trying to get hot, okay. So this is very bad news in context of India's exports and imports, but RBI also tells you about that Indian economy is still resilient. When the global economy is not that much doing good, then how the Indian economy is doing very good, okay, because we are not that much dependent on the export market, because our private consumption as well as fixed investment is actually trying to sustain the Indian economy, okay. So that's the most important benefit of having a very large population or having a very large market economy. So this is what the RBI's bulletin is talking about, okay. The next important thing with respect to RBI bulletin is shifting tides, which is growing influence of non-bank investors in the GSEC market. So GSEC market is what? It is simply about government securities. Government securities, as in the previous lecture we've already understood that these include treasury bills as well as dated securities, which includes 5 to 25 or 30 years government securities, okay, and these securities are just bonds, okay. So these bonds are also tradable instruments, okay, and most of the buyer of these bonds, as per Reserve Bank of India's previous details, is banking companies, okay. So banking companies still possess the most government securities, and it is not because banking companies wants to do that, because banking companies have a restriction with respect to CRR, SLR, okay. So in statutory liquidity ratio, banks have to maintain reserves, and RBI has actually mandated to maintain such type of reserves in form of gold or government securities. So naturally banking companies will be having more government securities, and even repo operations, okay, repo operations involve government securities as a collateral, okay. Just give me a second. Okay, so what the news is actually talking about is that government securities investors is getting diversified. Okay, so banking always the dominant portion, but we are also seeing some other institutions also buying government securities. Okay, and this is very much beneficial for the financial system, because all of you know that whenever we diversify our products or whenever we diversify our portfolio, then our risks also get diversified, okay, because risk get distributed into different assets, okay, or different players. So this is what is happening in context of government securities market, which is the risk is getting distributed between banking companies and other entities also, which includes mutual funds, pension funds, as well as public provident funds. Okay, so anyways, this is beneficial for the whole general economy. Let's move on to the next, which is agriculture's dependency on monsoon rainfall in India. Okay, so if we look at the statistics of agriculture in India, then almost, not the exact, but almost 50% of India's agri land, okay, or agriculture is still rain fed. That means is dependent on rainfall. That means only half of India's agriculture is done by proper irrigation methods. And this is what this bulletin is already talking about, that previously while India was actually, vulnerable to various rainfall basis shocks, but right now it is actually becoming increasingly resilient. So it's just a basic thing, and the important portion for you to remember is that what's the irrigation data, especially if you're focusing on NABARD exam. Next is private corporate investment. Okay, so private corporate investment performance and near-term outlook. So whenever the RBI is actually talking about near-term outlook, okay, so it actually puts previous data, the actual previous data which is happening in the previous month, and then try to extrapolate what will be happening in the future. So if we look from the previous data, then obviously it is clear that private sector is still actually increasing capital expenditure in the economy. And this is a very healthy sign for the economy, because as you increase capital expenditure in the economy, the multiplier effect will increase the growth naturally. And this is evident in the maximum capital expenditure in roads and bridges, as mentioned by Reserve Bank of India. Okay, let's move on to the next news, which is RBI actually launched Udgam Portal. Okay, please remember this, very important from the upcoming examinations, that RBI launches Udgam Portal. What is this portal? This portal actually enables you to identify unclaimed deposits that you might have in any particular bank. If I am a customer of, let's say, suppose Vijaya Bank, and I actually opened that account during my college days, okay, but when I, after 10-12 years, when I'm actually out of college, I actually forgot how many, amount of rupees that I actually forgot was in Vijaya Bank. Okay, so that has been remaining unclaimed for so many years. Okay, so if I want to identify how much amount of unclaimed deposits is there in the Vijaya Bank, then I can go to the Udgam portal launched by Reserve Bank of India to identify how much money was there. Okay, so I hope this is very much beneficial, and you can also go to the portal, try to see whatever amount of deposits is there. Apart from this, okay, the campaign that RBI actually launched, 100 days, 100 pays. Please remember this also, because this was also in the similar context of this unclaimed deposits. Okay. Next is fair lending practice, penal charges in loan accounts. So this news actually talks about that how the banking system is actually, doing a little bit of fraud in context of, penalizing the customers or the loan accounts whenever they get, either delayed, whenever the payment is either delayed, or due to some reasons the person is not able to repay that loan. Okay, then how does actually these banks employ penalty charges? The usual practice is, let's say, suppose you have taken a housing loan at the rate 8%. Okay, And suppose if you have, if you didn't repay 1 or 2 installments. Okay, so to instill the credit discipline, if you do any services or any penalty charge is levied on you, that will be usually independent of whatever amount is there. Okay, that is usually 1,000 rupees, 2,000 rupees or something like that. But what banks are doing, they are actually trying to increase your interest rates as a penalty charge. Okay, so this is very much, major issue, as if you look from the perspective of customer as well as the regulator. Because for customer, obviously, if your interest increase, then naturally the amount of corpus will also increase, and it will increase based on the loan amount. So suppose if that would have been, the penalty would have been a fixed charge, it would have been, up to 20,000 rupees. But if it, is attached to your loan amount, then the higher your loan amount, the higher will be the interest or the penalty charge. Also, so this is wrong from the customer point of view, but this also increases the revenue of the bank. Okay, so instead of just using it as an expense, bank is incorporating such penalty charges in their business model also, because they are actually doing revenue from this. And this is what is not liked by Reserve Bank of India. Reserve Bank of India is actually saying that we are providing you to penalize through penal charges and not penal interest. So this is the key difference with which the whole issue is all about. Okay, so RBI says focus on this, and this is what the usual practice is going on. This is hurting customers, and this is obviously is degrading customers' trust in the financial system. Okay, so this is all about in this article. Next is regulatory framework for IDF NBFCs. So what is this IDF? IDF is Infrastructure Debt Fund. So such type of funds are usually established to provide various amount of money to especially the infrastructure sector. Okay, so it may be utilized or established in 2 types. Okay, so let's see how it can be established. So it can either be established as a trust or it can be established as a company. So if we are seeking trust-based infrastructure debt fund, trust-based infrastructure fund, okay, that can be established as a IDF mutual fund. Okay, and next things, if it is established as a company, then obviously it will be IDF NBFC. Okay, so naturally if they are established on the basis of different types, they will be regulated differently, because mutual funds, as all of you guys know, is regulated by SEBI, and IDF NBFC will be regulated by Reserve Bank of India. Okay, so what the news is all about? It's all about such type of entities, okay, and the regulation for such type of entities. In the regulation, what we will see the asset size, we will see the exposure limit, we will see the capital to risk weighted asset ratio and various provisions for specifically IDFC, NBFCs, so that they can function, viably. It's not like, if these regulations are not there, then obviously it will lead to, excessive lending without taking care of assets. So let's read about those aspects also. So the important portion for every one of us is to remember this 300 crore net owned fund. It is essential for you to establish this IDF NBFC. This much amount of fund should be with you in order for you to become or give a recognition for NBFC. Okay, you have to maintain CRAR ratio of minimum 15%. CR, capital risk to asset weighted ratio, is, all of you know, capital divided by risk weighted assets. When we talk about risk weighted assets for any banking company, loans are assets and different type of loans is provided by a banking company. Okay, there is a personal loan, there is a housing loan. Usually the risk is much higher in case of personal and less in case of housing. Then obviously the risk weight will be accordingly different. Okay, and that after calculation will be the value here, and they are saying 50% you have to maintain. Based on that, your capital will arrive. Okay, so this is the key aspect of CRAR as well as net owned funds. Please remember this 300 crores and 15% of CRAR. This is the exposure limits. So when we talk about exposure limits, it is already about that how much in which sector you can actually put in, when we talk about in context of mutual funds. Okay, so mutual funds, all of you know, they collect money from all of us. Okay, then they get a huge amount of funds. Okay, then these funds will be utilized by a mutual fund manager. That manager is well versed in the stock market operations. Okay, then that mutual fund will deploy the money in different stocks. Okay, the exposure limit on these mutual fund companies is that you cannot, put in fund more than 10% in one particular company. Okay, so every mutual fund that you will see that every mutual fund has in a particular single company less than 10% of amount. Okay, so similar cases in context of infrastructure debt fund, NBFC. The exposure limit is 30% for a single borrower. That means, whatever amount that you guys have, okay, 30% of that amount is the maximum limit which will be given to a single borrower. Okay, more than 30% of your funds you will not give to a single borrower. So this is the exposure limit. Next is 50% of their tier 1 capital for group of borrowers. So this is very simple. Not more than 30% will be given to one single borrower and not more than 50% will be given to a group of borrowers. So this is what the exposure limit is all about. Okay, so this was all the major aspects of regulatory body news. Let's quickly see what are the various one-liner news for you to remember in context of phase 1. Okay, so let's see this also. So this is index of industrial production. It is actually talking about how much production is actually done in the month of July. Okay, so the data is 3.7% in case of June, Okay, and it is actually telling you that it is starting to slowing down, and the slowdown is mostly attributed to the high base effect, which we also discussed in the previous class. Okay, so the previous class, the first news is all about index of industrial production, and the high base effect actually tells you that if your previous base is higher, then even if you grow much higher than that, this difference is relatively lower. But you know, if your previous base is that much lower and if you grow this much, then obviously your difference will look higher. Okay, so this is the concept of high base effect. Next is a simple news or a dynamic news which says that net direct tax collection has been up to 5.8 trillion, which is 32% of whatever the budget estimates for financial year 24 is there. Okay, so every year the government releases budget estimates in which government actually estimates that in this particular year the government will be able to generate that much amount of revenue, and those revenue obviously will be generated through taxes, which includes direct tax as well as indirect tax. Okay, so this is what the news is all about, that the government is saying that we have accumulated at least 30% of the budget estimates that we actually mentioned during budget. Next news is about a particular agency, which is National Institute of Public Finance and Policy. So just like how other agencies come out with India's GDP figures, this agency has also tried to say that GDP in India may grow by 6% in financial year 24. Okay, so simple plain news. Remember this agency's name and remember what percentage it is talking about. And don't worry, whenever the exam will be coming near, okay, we will provide you a list of organizations that have projected what India's GDP figure would have been there. Next is Kharif sowing. Okay, covers 90% of the normal area. So Kharif crops, all of you know. Okay, so now is the Kharif season. Okay, so Kharif season, the news is saying that almost 90% of the Kharif area, Kharif agricultural area in the country, the sowing has been done into this. Okay, and various Kharif crops data with respect to the sowing is provided in the next this infographic, in which we will see that how much percentage increase or decrease the Kharif crop area is in this year. Okay, so as per the news, it is actually talking about that the rice cultivation area has been increased from the previous year by 4.92%, and this is the amount of agricultural cropped area in Kharif season from the rice perspective, which is 32.82 million hectares. Now, based on this infographic, if you are giving the NABARD examination, these three Kharif crops are important, which is rice at the first number, then obviously oilseeds at the second, and coarse cereals at the third number. These are the top three crops arranged on the basis of area in 23. Okay, so this is the important thing that you please remember from this news. Next news is about that skill ministry, that Ministry of Skill Development and Employment launches DBT in apprentice scheme. So what scheme is this? It is National Apprentice Promotion Scheme. Okay, so what the government is actually trying to do, I guess this is very late when we see government is actually trying to utilize DBT in every scheme that it has launched, but it has come up with DBT in case of National Apprenticeship Promotion Program. Okay, so in this program, what are the main features is there that the government provides 25% of the apprentice stipend, and the maximum limit is 1500 rupees. Okay, so there are two features of this apprentice scheme: 25% of apprentice stipend up to maximum limit of 1500 rupees is provided by the government. Okay. Similarly, 7500 rupees, training cost is also provided by government. Okay. Then obviously if I'm as a government is trying to provide such type of money to the apprentice, then obviously I need to have some mechanism that is devoid of corruption, that doesn't include corruption, that doesn't include middlemen. Okay. Then obviously what's better to use than DBT. So all these benefits will be directly credited into the bank account of apprentice. Let's move on to the next news, which is alternate investment funds, okay, rise to 8.5 trillion. So this surge, okay, and this is all about alternate investment funds. First of all, let's see what is the basic minimum funds that they must have in order to be called as alternate investment funds. Okay, so the name is very fancy, but if if I tell you that venture capital fund is one type of alternate investment fund, private equity fund is known as alternate investment funds. Okay, so such type of funds that actually put money in this unlisted companies. This is the key term. So such type of fund that invest money in unlisted companies that are not listed on the stock market, that are actually trying to raise capital or startups. Okay, so those are known as alternate investment funds, and their performance is actually rising. So here the important portion for you to is understand that what are AIFs, okay, not these dynamic figures which keeps on changing. Next is India-Australia trade pact utilization at average 90%. So what does this mean? That recently India and Australia has signed a trade pact in which both countries decided to reduce the amount of duties whenever they are trying to export to each other's country. Okay, and the benefit is obviously realized by here, which says that 90% of the trade utilization capacity, that means whatever target that they had in mind, 90% of exports and import is actually being done by the both countries. Okay, and in specifically when the Commerce Ministry actually saw this data, they are actually saying that although we have provided various amount of duty reduction, but they are actually want to see that whether these exporter and importer are actually using this duty concession benefit or not, or is this phenomena is as natural without duty that they are actually doing because of the demand and supply forces. Okay, so that they can do some policy changes to generate more benefit for Indian exporters. Next is about Bank of Maharashtra tops PSU's lender chart in loan deposit growth in Q1. So this is a static news, very much important for you. So you can see Bank of Maharashtra, okay, is actually right now at the top in terms of loans and deposits growth. And they are, obviously not in terms of, the amount or the corpus amount, but at least in terms of percentage wise. And this is usually, whenever we discussed in context of IIP, and we saw a very low figure, but that was due to high base effect. But in case of Bank of Maharashtra, you will see that because of the low base effect, this 25% growth is visible. Okay, so just please remember that which bank has registered. If any question in the IBPS will come, it will be coming on the basis of which bank is there. Next news is about SEBI planning to utilize geotagging to boost enforcement activities. Okay, so whenever we talk about geotagging, so first of all understand what is geotagging. Okay, so whenever you open Google Maps, okay, and if you go to the location and you will see some pictures of that particular location, that is known as geotagging. Okay, so this means of a particular location on the map, you actually put various other pictures related to some monuments, some road pictures, traffic details, population. So this is known as geotagging. That means providing various type of data at a particular location. Okay, so this benefits various activities, because suppose say if SEBI want to do enforcement activities, it goes into a particular location or a company for any raid activity. So if SEBI goes into that particular company, SEBI within its own system will actually, put in all the amount of files and all the amount of data that it actually got from that particular company into that location. Okay, so whenever SEBI opens a map kind of portion, if they click on that particular company, all the data with respect to that data will be provided to the SEBI. Okay, so this is what SEBI is trying to do here. Next is about RBI news, which actually is utilizing McKinsey and Accenture's expertise in context of AI. Okay, so RBI wants to utilize AI for all its regulation purposes. As you all know, RBI deals with a lot of amount of data because RBI deals with a lot of departments. Okay, so obviously RBI wants to utilize AI in context of their own activities. So they have asked McKinsey and Accenture to incorporate AI into their regulation system. So please remember McKinsey and Accenture. Okay, so any question that might come will be based on this. Next is State's Fiscal Health Report. Okay, first of all, this is released by Deutsche Bank India. Okay, and it talks about which state is having good fiscal health. Okay, good fiscal health is very much dependent on debt or fiscal deficit. Okay, so any state whose revenues are good, whose debt is low, as well as fiscal deficit is under control, those are top states. Okay, so ironically, after Maharashtra, Chhattisgarh is there in context of fiscally healthy states. Okay, so please remember this. Next is retail inflation soars to 15-month high of 7.44%, and I don't have to tell you that because of which entity this inflation got increased. All of you know how much tomato prices led retail inflation. Okay, so that's why in any news you will see there is a asymmetry between headline and core inflation, because core inflation didn't see any rise. It was mostly due to food and fuel prices, because of which this whole CPI got increased. Okay, so here the important portion is that you understand the constituents of CPI. Otherwise, this dynamic metric or the dynamic value is not that much important. Next, another dynamic news: services exports see 12% growth in month of July, and we are at $27.17 billion. Okay, not very much relevant. This is what I was telling you about, that food inflation hits double digits. It is mostly due to food inflation that our whole headline inflation actually got disrupted. Okay. Next news is about SBI research. So SBI research talked about India's per capita income and how it will be by the year 2047. It says from current 2,500 per capita income, it will grow to 12,400. Okay, so remember this figure, remember the details of the entity that has provided this figure, and remember the current per capita income, which is very much important. Okay, next is India-China agrees to resolve bilateral disputes. Okay, and this is mostly due to border disputes. It is an ever changing news. Okay, so and also not that much relevant from the perspective of exam, so we'll skip this. Next is government to intensify measures to control inflation. All of you know that how using fiscal policy, government tries to control inflation. And how does it utilize tax policies? So government reduces taxes to increase liquidity in the economy, to boost economy, and government increases tax to remove liquidity from the economy to reduce inflation. So government is actually trying to say that we are using various steps from the fiscal point of view to control inflation. Okay, these are other news. Urban poor most impacted in July, inflation surge. This is as per the CRISIL. Okay, so the most impacted section of the whole society was urban poor. Next is lending to NBFCs rose 35% to 14.2 trillion in June. This is on the basis of CARE ratings. Okay, so plain and simple news this is all about. Nothing relevant, dynamic data is there. This is very much important news, which is about PM Vishwakarma scheme. Okay, so this is a flagship scheme that the government has recently launched in the budget also. All this is very much important if you're focusing on NABARD examination. What are the key details of this Vishwakarma scheme? You have to learn for the upcoming examination. So, under PM Vishwakarma scheme, okay, there are majorly three aspects. First aspect is all about credit, then skill upgrade, as well as procuring tools. Okay, so if we look at the news particularly, the government has actually provided various benefits with respect to credit, skill, as well as procuring tools. Okay, so we have to remember first of all that these three features are there and what type of subsidy is provided by the government. So let's see that also. So primarily remember this outlay 13,000 crores for 5 years. Okay, and what are the three benefits? Credit of 1 lakh is the first tranche, credit of 2 lakhs in the second tranche. Okay, and this is the interest rate of 5%. So these are the benefits. Next, the crucial benefit is that they will get 500 per day for skill upgrade and 15,000 for procuring modern tools. Okay, so as I've told you, these are the three key features of PM Vishwakarma scheme. So I hope everything's clear to you. If there is any doubt, feel free to put in the comments box. Okay, we will take in the next portion of August. Okay, so thank you for joining. We'll meet in the next session. Thank you.